Everybody, Brian here. It is Wednesday, the 18th or 19th, rather, of October 2016. The S&P 500 added 51 cents today, and while that's good, we still have a lot of uncertainty here on this daily chart. You can see we are below that declining 50-day moving average, which is the green one and declining, and this purple one here is the volume-weighted average price since the Brexit washout, and we've been still closing below that now for the sixth day in a row. So that gives us reason for a little bit of concern. We've got the declining 20-day moving average just ahead as well. Looking down to a 30-minute time frame, we've made progress, and it appears as though we're more neutral here on the intermediate term. I would like to say that we're positive because we're above a rising 5-day moving average. However, we need to hold above really 213 and a quarter to 213.50 for this market to get back to a place where we can start having more confidence in long side in the market specifically. The S&P 500, but this has been an important level, and I think we probably really need to get back above 215 to think that maybe the worst has been behind us for this sell-off, and of course that 50-day moving average as well. So it remains a stock-picking environment right now, especially due to the fact that we are, of course, in earnings reporting cycle right now, and we're starting to see a lot of earnings come out, and it's going to be, dependent upon the individual results on how your stocks trade. So always be aware of when the stocks that you're trading are due to report earnings. For tomorrow, we're going to want to see that the market holds above that 5-day moving average. The week-to-date volume-weighted average price right now is just around in that same area as well. You can see here at about 213.60. So I think as long as we remain above 213.50-ish, then we can not worry about an immediate sell-off. But of course, if we get back below there, you would want to take a much more defensive tone to the S&P 500 at least. The NASDAQ, you can see I've got a bunch of lines drawn on here, and this has been the bigger area of support that just down with last week's little washout low. This market has recovered nicer, as we can see here, and the key level that we want to see hold over the next couple days would be really 117 and a quarter to 117 and a half, drilling down to a 15-minute time frame. The volume weighted average price from this low is just below that 5-day moving average. The volume weighted average price from this breakdown and from this gap higher, you can see that we're holding the volume weighted average price from this move, and that's good to see from a recovery perspective because that was the new high. So we're back above that level and held above it for the last 2 days, the volume weighted average price from this day. That means that the average participant since that breakout is now in a winning position. So that adds to a little bit of the bullishness. And of course, the NASDAQ is much stronger on a chart basis here. We have a rising 10, 20, and 50-day moving average. And on the intermediate term, again, we want to see realistically 117 and a quarter to 117.50 hold. I would prefer if we hold in above today's low, but I wouldn't be stressed if we got down below. Right now, the last 2 days, a little bit of profit taking. The average price of the last 2 days is basically today's highs. So tomorrow getting back above today's highs should provide a little bit further push, and perhaps that's even tradable for short-term traders with a stop just below today's low, because we'd be back above the 2-day volume weighted average price, and we're above the 5-day moving average and all these other levels as well. The Russell 2000 was up 51 cents, but we still see that this market is the weaker one. We have that 5-day moving average just flattening out right now. The tomorrow, when we get rid of this information, that 5-day moving average will begin to rise as long as we're above there. So we want to see basically, I think, 121 hold. Going back to the daily time frame, if 121 fails, then it looks like we'll probably come back into this bigger range here, and breaking into that, would give us reason for pause because we have a declining 10, 20, and 50-day moving average. So all in all, it remains a mixed market of mixed messages. But when we have good stock ideas like today, we had 2 long ideas. One was to buy First Solar above this level here, and we had taken a third of that off. We're still long 2/3 of it. Longer term, I still don't think that the stock has made a bottom yet, but nice bounce for a day, and we'll be raising our stop in there. We also got long shares of NOV. Let me talk real quickly actually about the semiconductors. They were down a little bit. I think we want to see them hold at the 67 level, but they're undergoing a little bit of profit taking and perhaps more sideways um, acu- um, digestion of the recent rally. I don't see any reason for real concern there, but we are below a declining 5-day moving average, so keep that in mind. The biotechs continue to be awful. Maybe they'll get a little bit of a bounce after the debate tonight. Who knows? But the trend is still lower. There's still the worst group here. We were below all key moving average levels. And again, if they don't scare you out on the way down, they'll typically wear you out. Shares of Apple just kind of pausing in here as well.